Hi guys. So today I wanted to talk about, you know, what it, what does it take to be trading with order flow. Okay. I think some of the people have been really confused about this notion. They think maybe to trade order flow, some think it's a little bit complex, some think it's a little bit easy. Everybody has their own thoughts. Some think it's a different system, it's a different type of software. There's a lot of things going on out there. But here today, I'm here to present to you, how can you get started with order flow, or what are the things that you should be doing while you're being trading with order flow. Okay, so before trading with order flow, first you need to establish your logic. Okay, now the logic is the reason to buy or the reason to sell. You need to have this in play. Now, many people, you could call this as structure. Okay, if you are looking at structure as part of your logic, that's fine. You might be looking at fundamentals as part of your logic. It's okay. You're using volume profile, you're using market profile, whatever type of logic there's tons of logics out there. I don't want to call them strategies because those are logics for you to buy and sell. What makes you so confident that price is going to go up, or what makes you so confident that price is going to go down? Okay, but it's like you have 60% of a trade. You have built your trade like 60% of it, and there's still 40% remaining, or 50%, and there's still 50% remaining because you need order flow to confirm this trade. Then the second thing in here will be for you to go into your trade and look at now your footprint chart. Okay, now on the footprint here is where you can tell historically how volumes have traded. What do you expect? Remember, it's happening in real time. The data is keep coming on. You also have a third eye. I call it a third eye into the market. You see, because you see everything, but there's sometimes it's a little bit hard to process all this, but this is what you have. So logic, then you go to the footprint. In the footprint, you conduct your footprint analysis. Okay, or either it's intrabar, if it's end of bar, or if it's multi-bar. Okay, that's upon you. That's the type of analysis that you want to conduct. Okay, so after that, then you might migrate to the heat map now. Now on the heat map, here is where we can understand the liquidity. Remember, we have the footprint. Okay, so I'm just gonna call it FP. Okay, we have the footprint, but you have to understand, what does it show? It shows you aggressive participants. It does not show you passive. Okay, so passive, excuse my handwriting here today, but I think you can follow my words, what I'm trying to say. So we don't see passive participants in the footprint chart. We only see aggressive participants in the footprint chart. I know some softwares, they try to create the dome on the right hand side, but it's not really that visible because it shifts from time to time and you can't get the historical on the dome. So this is why we need the heat map to see how liquidity has been acting in the market, how it has been traded, how price has been moving up and down to facilitate a trade. I know some of you know about the auction market theory, so you can understand the price acting as an advertising mechanism. So this is why liquidity can be available or cannot be available in the market depending on the market hours. So with footprints, we know it's only aggressive participants, but then we need passive. So let's see how that will look like if you're going to try and build a trade. Okay, so let's go here. So first, let's take away everything out here. It's a little bit messy. So if we go here, so this will be first, this is gonna be, let's say this is your logic. For example, I have my zones here. I labeled them. I'm looking mostly at liquidity levels, so this is why I was labeling these levels. So, and you can see how they reacted very much every time. This one was yesterday, we almost go to that area there. So this is just a like a zone on institutional zone, we could say, where we expect big participants to come into the market. I have my way of, I'll cover it maybe in the next video. Okay, so we are looking at price right now. We might be having a lot of logics. We might be having a lot of reasons to buy or sell into this trade. So let's say, for example, for yesterday, I was mostly looking for sales, but the reason was this candle here. Uh, when price broke through this zone, I was expecting what is price gonna do, but something very very nice happened after, and this was the opening bar to London session. So as I was as I was just looking here and there, as traders, you're always waiting, sitting in the screen. This is what happened. Okay, so this is the 5 minute candle here on the minute. This is on the range chart. Remember, I told you I'm using a range chart. So market opens on this bar. This is the bar that market opens. They tried. It's not like they didn't try to go up. They opened and they tried to go up. But look, we got a sequential decline and sellers start to get in from the highs there. They push prices. Here you see delta just positive 15. But remember, we have a threshold which we know that price is not aggressive. Even if you see those numbers, it doesn't matter it is positive or negative. So the next bar, look at what price does. Dumps. But very very interesting thing is, right after the open, this is where you should be looking for at least your first take profit, based on what is your logic. Now let's go back to the previous chart, and I'll show you something. What happened? See, so this is the first zone that I had marked previously, and it was an area of liquidity. Also, you can see it goes far back, and here is when this was the liquidity area. Look at when price came the first time. You see, it created some sort of a wick. You see, look at that rejection, because this was a very very high liquidity area. I was looking at my heat map at the time. I labeled this area, and the next time price, what it was doing, it was rejecting to it. Then later on, this is where I look at even the nature of the breakout. Just before the breakout, you got a stop, and then price continued to rally. Now yesterday was very very crucial. How? Because the first time, this is just supposed to be a take profit, but what happened now? This is why I'm saying you have to be using minute chart. Is sorry, you should be using range chart instead of minute chart. Okay, now look at this. So this was on a range chart. Now range chart tells you that if price hasn't migrated from one area to another, it will show you clearly. Now on a range chart, you are clearly able to see this. Look what happened here. Okay, so price comes to an area, we extend the dollar of the day multiple times, then we range. Why did we range? Remember, if we are ranging, it means both buyers and sellers are present. So we are ranging delta. Now we get a delta divergence. I know for some they could say maybe it's a reason now to go along, but for me it wasn't. Why? Because the nature of the logic, this is where we say now logic is more important. The logic here, look at the impulse nature of price to get even up to down there. There was a high liquidity area here yesterday. I would like to show you that, but that is yesterday's data. I will have to reload again, start over, maybe go into yesterday's feed, but I'll do that in the next time. So you see price breaks later on, but before it breaks, very very interesting, we see buyers retaliating very aggressively. Then we get the algos involved. Then we tried to show people that we want to go high, but every time it's just exhaustion, then absorption. Then later on, the market just follows where it wants to go. Okay, so this is it. But why? Because you need to have your logic intact. You need to have your levels, where you're gonna buy, where you're gonna sell. What do you expect? okay? And you can just see here later on in the same zone, price left. You see, price had already left. Then near this area we got rejected again. Where did we retest? The same exact area. Then now we come back. Now we're just, we're just expecting what's going to happen. We are between the zones. Now, this is just my zones. They don't mean anything. You could have your zones. You're free to do whatever you want with your screen. But we need to spot these liquidity levels. And liquidity levels is easy for you to see when you're using bookmap. It's much easier to notice